Hi everyone, David Carpentier here with Shirley. We're with two of our trusted partners in the private securities and crowdfunding space. And we are going to address three or four questions that have been continually bubbling up and being asked of us as insurers, certainly from the portals, as well as the legal folks in the space. I will let each of the other participants introduce themselves. And so, Jeff, you want to take it away?
Sure. David, yeah, thanks for letting me be a part of this. Jeff O'Brien, attorney with just Chestnut Cambronne law firm based in Minneapolis. Do a lot of SEC type work, private offering work. Been doing it for 21 plus years. Licensed in multiple states, but of course SEC is federal. So we got clients all over the place doing this stuff. So,
David?
Yeah, hey, thanks, David. Really appreciate the opportunity to be part of the Brain Trust today. So I'm David Duccini, founder and CEO of Silicon Prairie Holdings, Inc. We're a collection of financial technology companies centered around helping other businesses raise capital publicly or privately at scale. We started in 2016 as a state-based crowdfunding portal here in Minnesota under a state-based exemption. And then in 2018, we became a federal funding portal, reporting to the SEC and FINRA. We also formed an SEC reporting transfer agency in that same year, 2018. And then in 2020, we acquired a broker-dealer, FINRA reporting broker-dealer, that we have now applied for an alternative trading system registration. So fundamentally, we're here for business. We have just a ton of different tools to help people raise capital either publicly or privately. Regulation crowdfunding, state-based exemptions, Regulation D, and then of course, Regulation A plus, kind of as the holy grail, and then eventually, providing a path to liquidity. So that's what we're up to. Kind of lazy over here.
Wonderful, wonderful. And David Carpentier, CEO of Shirley, we're in the insurance space, so we build or we adapt insurance policies for changing industries. Based on that, the private security space and some of the innovation, David and your peers and Jeffrey and your clients, the way that folks are changing the way they operate, raise capital, et cetera. It lends itself to additional risks, and we've been fortunate enough to build basically the majority of the insurance products for this industry. Continue to build more as the industry evolves and changes. All three of us have had a lot of the same questions posed to us by primarily issuers, as well as investors and other stakeholders. And I think what we wanted to do was bring those questions kind of to the top and let us each kind of address and talk about it that's most relevant. The first one, the top things that investors get upset about. So David, talk about, when you're helping folks build campaigns, and they start talking about, where is my investor going to get upset that they might not be familiar with? What are some of the things that you hear from the investors, but also things that you kind of counsel your issuers as they're building their campaigns?
Yeah, that's a really great question. I think so. Top of the funnel is probably top of mind. I'd say is probably questions around sort of transparency, like what is it that I'm buying? What are you selling me? And what does that entitle me to? This might be the first time. In fact, we've seen that. Actually, the feedback. This is the first time, people have ever actually made a direct investment in something. So, people in the real estate space tend to be a little more seasoned, but a lot of times, even in your local brewery, a lot of times this will be the first time someone's ever gone on to acquire, a security. And so then just because, it started out essentially as, equity crowdfunding, and then quickly that title, fell out of favor because a lot of founders don't want to sell equity. This is now investment crowdfunding. And so a lot of times it's just really, what is it that you're selling to me? And what does it entitle me to? I'd say that's probably one of the top sort of, questions that we get. And then after that, shortly thereafter, I'd say it's, a matter of, again, communication that a lot of times these issuers, don't provide ongoing communication. And that can actually even somewhat get you in trouble a little bit with the SEC under regulation crowdfunding. You're supposed to file, annual reports until you at least, choose to opt out of them. And then I'd say the last, the third question is, how do I sell my security? How do I potentially get out of this thing? I would say are probably the top three that we hear most frequently.
And when do they get ornery, the investors? Like, what do they complain about? What do they get mad about?
Oh, they get mad about lack of communication. I mean, for sure, especially if a campaign, launches and they make their investment, and then there's like no updates from the issuer while the campaign's still going on. Especially, and these things can be long lived. Most of these exemptions, are good for up to a full calendar year. And so while we try and get our issuers to compress, their fundraising to about 90 days, 120 days maximum if they can, unless they've got a good need, potentially to keep it open, like we've seen with some of the breweries, they just can do perpetual funding to some extent. So I would say that they start to get a little cranky, maybe 60 days into the campaign when they're looking for updates. And so again, I think it's just the secret to happiness is managing expectations.
Got it. And Jeff, these cranky investors, or maybe more than cranky, valid complaints. When do these complaints turn problematic for your clients? And maybe that might not even be restricted to regulation crowdfunding, but just generally.
Yeah, well, knock on wood, I haven't had any investor complaints against my clients, but that's part of, I think, of how I advise them going into these. And I always talk about, when you talk about liability for a securities offering, it's always good to step back and kind of think about what the legal scheme is here. And there's really two ways you can get in trouble legally with any kind of a securities offering. Number one is you do an offering without registration, and that's what we have an exemption for, right? So we follow, if it's a Reg CF offering, you follow the requirement, the safe harbors of Reg CF. If it's a Reg D, you follow Reg D, right? So you can eliminate your liability for that and on that aspect by adhering to the requirements. The other way of having liability, of course, is fraud. And you can never, I tell clients, you can never fully insulate yourself from liability for fraudulent misrepresentation. You cannot guarantee what's in somebody's mind, how an investor or a potential investor hears what your pitch is. The only way that the best way to mitigate the chances of liability is disclose. You give all the information that would be pertinent to an investor to be able to make an informed decision as to whether or not it's a good thing to be investing in the company. So I think the real main piece, back to what David's point about transparency, it's the volume and quality of the information provided to potential investors. That's the best way that an issuer can stay out of trouble.
And so we see it as an insurer, we see when complaints turn into a lot more than a complaint. We've seen fraud in the industry. We try to keep it quiet for the most part. But so somebody's hearing it from other than us. Let me be the issuer. Let me say, I don't really believe you. Do they really complain, or are they squeaky wheels? Do they have the right to complain? How does this turn into a bigger problem for these issuers?
Yeah, I'll jump in here. So one of the things that we've been seeing a lot lately is, this notion, sort of the rise in the popularity of the special purpose vehicle, the SPV side of things. Now, this is being sold by some of the other portals as sort of a solution to a fake cap table problem. So a lot of times we'll see, founders come and say, well, look, I want to take this money from all these strangers, but I don't want to give them any rights. And so I think it's a horribly abusive of the goodwill, quite honestly. Part of the problem is that a lot of founders, really just don't focus on solving their today problems. They want to get the money. They also have to respect, that this is money that's coming from other people. It's other people's money, and those people have rights, and entitlements. And so I think, part of the challenge here is that, I think for there are certain classes of issuers that are a little more savvy in regards to, like, this might be the first time they've ever really broadly solicited, or they don't know. Like, I mean, taking in a retail investor, right? Those can be really squeaky wheels. And if they don't have, we always try and counsel them too. It's like, look, what you need to do is make sure, when you engage someone like Jeff, like, you need to make sure that your operating agreement or bylaws give you some sort of preemptive right of first refusal to buy those securities back, right? So if you do get an activist investor, right, at least, have a parachute in there to get them off the cap table to some extent. But we hear it, on some classes of issuer rights, like, look, I know these people, it's a handful of people, it's a real estate deal, we don't need to layer on, some additional protections necessarily. But, in other cases, where it potentially, could be, a lot of investors, and you don't necessarily know all these people, the Tiger Mark product, I think, has got a real strong play there.
Yeah, and the shameless plug for Shirley in the D&O product. And I think that's what we've seen too, is having an opportunity to say we don't know what complaints turn into problems. We don't know who cares about what, but we just know that the more people that are involved, the more potential problems. And it's not something that should scare any of these issuers away. They just need to adjust accordingly, right? So let's move on. When issuers or companies, let's call them companies, right? Because we all run companies. I don't necessarily consider myself an issuer, even though I'm issuing shares of our company when I raise capital, right? I am a company. How do I determine what is the right security to sell when I raise money? Jeff, you want to start?
Yeah, it's a very amorphous concept. I usually discuss it when I do my initial onboarding with the potential client and kind of talk through, not only what a crowdfunding offering entails, but I always like to ask the question, have you given thought to what you would be offering? And I think that there's a little bit of art and science to that in terms of figuring that out. There's very, I always say that, is it going to be a common stock offering? Is it going to be preferred? If it's preferred, what are the preferences? Is it going to be notes? Is it going to be a safe? And it kind of depends in some ways on the nature of the business. For example, let's take the safe, right? If you can foresee, and it kind of prompts you to have a little engage in some forward thinking and thinking down the road, maybe 5, 10, 15 years, or whatever it is, in terms of where the business is going to go and where the growth is going to be and what capital needs are going to be there, right? So if you can foresee on one or more rounds additional financing, and you're talking about, you eventually would go to a preferred offering, then that's, and I think the nature of the business, I think if you got, say, like a technology-based business, I think that a safe is a prime candidate for consideration there, right? Preferred stock, it's usually if the issuer wants to maintain control, let's say voting control, well, you better be coming to the table with some sort of financial incentive as to what would make somebody write a check and have no say in the operation of the company. Well, if you throw them 6, 7, 8%, annually on their money, maybe that's enough for them, right? So, you always have to think of what might be of interest in the market. And that's one of the things that I like about Reg CF with the test the waters aspect of it. You can kind of put your toe in the water and figure out what might appeal to those investors. Not only is there interest in your company, but also what they might be looking for in terms of the type of security.
And David, is Test the Waters, is that a tool just for determining what type of security to sell? Or
so on the Test the Waters piece of it, I think the real power there is getting some sense of could I actually raise money, right? And so we always try to advocate to our our company clients, our issuer clients. It's like, before you press the go button, right, please make sure you have about 20 to 30% of your minimum soft circled from your existing network. And if you don't, then it's probably, you're probably not really going to be successful if you launch. I mean, there's nothing sadder. We say this, like, there's nothing sadder than seeing a musician on the sidewalk with a guitar case that's open. There's no money in it, right? So you've seen that, so the best, the most seasoned, musicians know they have to salt that tip jar, right? It's like at a bar, whenever you see there's a change, from one bartender, they'll always come and drop a few bucks, some dollars in, right, to get over that initial hump, right? So, we don't want to create a boneyard of a bunch of offerings if they don't get any kind of velocity in the first, 30 or 60 days, right? Because that basically that essentially raises the bar for your first investor to come in. It's like, well, this thing's been open for 3 months and nobody's invested, right? So that's kind of in a nutshell. So I think the Test the Waters is an amazing opportunity to go, and we've seen now with several people, like, look, I thought my friends were going to show up. They actually launched a Reg CF offering, and their friends didn't show up. And now they're back to going to test the waters to, to at least, say, well, what would be attractive to you?
Got it. do you see people getting hung up on cap tables a lot? And I guess maybe I'm just going to assume the answer is yes, right? David mentioned it once, in SPVs being kind of a tool. But, this is a leading question. But David, if you could just go quickly, talk about the benefits of digitizing a cap table. And if you could do it in a way of, I'm a business owner. I am a founder. I have 100 bazillion things to worry about. What are the actual tangible benefits of a cap table in a digital sense in your opinion?
For sure, absolutely. So I mean, first of all, the thing that we're gonna, we want to help educate our, our clients on. Look, if you sell something that's not equity, it doesn't hit your cap table. Now it might hit your balance sheet, but it doesn't hit your cap table, right? You sell a convertible note, right? That doesn't, unless there's a conversion event, a safe, right, may never convert, right? And so, and that can be essentially protective, but the reality here is this, that everyone seems to forget that, a big cap table is not your today problem, right? Lack of money and running out of runway is your big today problem, right? And people seem to forget that they could always just go and form a new holding company to then essentially buy or contain the current company that they have. It's like their minds are like wrapped around this idea, like I need to create a subsidiary to do the raise-in so I get this one line on my cap table, right? Not realizing that you're gonna have double the cost in accounting and that you'll still owe all those investors potentially, 1099s or K1s anyway. Like it doesn't solve that problem for you. So, the short answer is, figure out what security you're selling, if it's going to hit your cap table, and then B, absolutely, there's tons of tools out there. I lost count. There's like, 20 or 30 different cap table management companies, including just using Excel to essentially manage, the list of stakeholders. And honestly, part of your go-to should be thinking about investor relations as a service, going back to the thing about, investor communications, right? So part of your cap table problem is also having something like MailChimp, right? You want to keep your stakeholders, engaged, because guess what? You might be doing a round in another year or 2 years, right? And, you don't want to have that cold call with somebody's like, yeah, I took your money in 2 years ago and I know I haven't given you information, but, can I please have more money? Their answer is going to likely be no.
So the cost of accounting is an interesting thing. I can speak to it from the insurance side, but I'm going to let Jeff, you speak to it on your side. The cleanliness or just digitizing a cap table, does it help reduce legal costs? Is there any impact to the fees other than accounting that the companies raising capital should be aware of?
I don't know that it necessarily helps reduce the legal costs. Now, a lot of the folks that I work with they have very simple cap tables to start out with, right? Initially, but I definitely think, having a good cap table, kind of keeping it updated as you go forward, being able to understand the dynamics of it, right? I've had, as long as you've got someone in the organization that knows what the heck, how the heck to interpret it, you're in good shape. But again, I think that when it comes to the nature of investment crowdfunding, I think it's less. I really do think that you can say the same thing about valuation. I think cap tables and valuation are concepts that I don't think are as integral to a successful investment crowdfunding offering as your Reg D offering, or or a VC deal or something like that, right? We all know that what you're getting you have to think about the investment, the crowdfunding investor, right? What they're really investing in is two things: the business and the management team, right? There's something about the individuals involved. There's something about the business, whether it's something that they are a consumer of. When we get into the beverage stuff, could be a food product. I'm seeing a lot of like telemedicine, telehealth type businesses contemplating this type of offering. So you see a lot of consumer-based businesses that it's kind of the investment principle, and I forget who espouses it, about invest in the products and services that you use. That's your investment crowdfunding investor, right? That's who you're going to get, whether it's the patrons at the brewery, it's the users of the service. It could be if it's a particular industry, real estate could be, somebody that wants to get into small real, or it could be realtors, or someone wants to get into small real estate investment, right? That's the real sell here. It's not so much crunching cap tables and valuations. We know a lot of this stuff is arbitrary. We're just getting out of the gate. The question is, do you think this is a good concept? Do you think these people know what they're doing? And are you willing to throw, some money in to see if you can get a better upside on something like this than if you were going into saying, a mutual fund or a stock?
Yeah. I know from our perspective, even just having the conversation day one, whether they're thinking they're digitizing a cap table or not, it becomes like the same conversation of the rest of the way that people are living their lives. Is you have the opportunity to write it down on a piece of paper, or you have the opportunity to put it in a piece of software and make it simple for everybody. And so from our perspective, even though the cap table might not be a today concern, simply starting with a digitized cap table has a massive opportunity from risk reduction. So we're passing savings on. So we're releasing price points, 50% less for insurance for people that are using, David and in his digitized cap table. But also when you talk about like investor relations, the customer service when something goes wrong, or the appearance of something goes wrong, when you have all that information and you can communicate with people and organize that information, you'd be amazed how much of a headache that just really reduces. And maybe not just the hard costs of accounting or insurance, but the soft costs of the fact that you are focused on raising capital and these other things. So I've seen the digitization, difficult word for me on a Monday, as a byproduct of this industry that is going to have a lot of kind of just new normals going forward. And, maybe as part of the final remarks is when, speaking as a founder myself, laser focused on raising capital, right? Specifically at the inception of the business, raising capital, understanding your market, who your customers are, and what they're willing to pay for. Leaning on experts and people who have experience, folks like Jeff and David, to help us sift through what is Reg CF versus Reg A versus Reg D. What's the use case for each? And little things that are like, I wish I would have done that before, like digitizing a cap table, right? Making sure all disclosures are there. It's something that we see, I've experienced it firsthand as an operator, but leaning on folks like you. And so in just 30 seconds on the way out the door, Jeff, just, what is the one thing in 30 seconds that you think makes the companies or the founders or the CEOs or the executives' lives easier by interacting with you?
Just a willingness to listen and adapt. The nice thing is, I think we've gotten a lot. David can speak to this too. I think the folks that have come through Silicon Prairie they're willing to take direction. They're willing to take advice. And when I talk to them, we run through we talk about the different options for what they want to raise. What going forward, the nature of the business, and they're flexible. And I think that's really a kind of deference to the experts is probably what you want in an issuer.
Awesome. And David, 30 seconds. How do you make it easy?
Yeah, exactly. So the thing is that at this stage, they need to learn how to talk about the amazing upside of their business and not about the amazing product or service that they create.
Got it. Awesome. Well, I appreciate you both for your partnership. All you're doing for our shared customers, and for participating today.
Thank you.
Thank you for having me.
Bye-bye.